Hello guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing great, earning a lot of money from the market, and of course, taking good care of your own health and your family too. Alright, so today I'm going to share with you a case study, we'll call it case study of a GBUSD. This is just an example. How you enter a trade, how you reduce your stop risk, not stop loss, how you reduce your risk, how you minimize your risk, uh or should I say it's a type of confirmation on your trade. All right, so I have two good example over here. All right, so let's start with the first example. All right, let's jump into it. So first of all, I have to explain a bit on supply and demand. Right, we are using mainly on supply and demand. So supply, we have two type of movement. One is rally, base, drop. All right. So this is the supply zone around this area. All right. Then the other one is the drop, base, drop. All right. It's a very common. This is the supply zone, and of course, the demand zone will be a drop, base, rally. All right, and rally, base, rally. All right. So this will be your demand zone. All right. So what I'm going to share with you is that we are based using on this how should I say, this type of movement, right? This type of movement, and of course my definition of supply and demand, the last supply and demand zone, right? So first, let's start with it. Okay. A lot of you do not know how to catch a QML, or do not know how to catch we call it this one, RBS SPR. So you can use a higher time frame supply and demand zone as your guidance. All right, this is example. I'm going to show it to you. Of course, you can use it at any currency pair, and of course, gold, silver, or you can use it. It's just that which time frame, how should I say, which time frame you can be use it better only. All right, you need to explore, you need to do a lot of back tests. There is a lot of currency pair. I usually just go through a few, right? I just leave the other the remaining one there. All right, so let's start. I have been talking a lot. So first example is over here. All right, so you can see the movement. This movement is going up, all right, around the hill, and then drop. All right, drop all the way. So some may consider this as a QML. Yes, it can be considered QML in a H4. All right, it's higher high, higher low, higher low, higher high. All right, before the big break, right, which has broke the structure around here for the H4. Right, and then of course, the price came back. I believe there is some fake out, RBS, all those things. Then you do not know where you should enter. So you can base on this fresh zone, right? You can enter based on this zone around here. So now the big problem is that this zone, how big? This zone is around 50 over pips for a GBP USD. Oh my God. Yes, you see it correctly, because this is daily chart, all right? Daily. So how do you do a sniper entering, or how do you have a confirmation? Simple. Very simple. I told you, first of all right, let the price comes back into this area first. All right, goes into this area. So what happens is that you need to switch it to lower time frame. I believe it should be H1. All right, usually from daily chart I will skip to H1. It's easier. So if you look at here, what you need to be looking at is structure break. All right, structure break. So the first movement over here, high, low, high, low. Oh my God, nice. But does it break any structure? Does it break any structure? No, because the structure is over here. It does not break any structure at all. Agree? All right, it does not break any structure. So means that the price can be going up again into the zone. All right, let it be. So what happens is that the price goes into this zone. Now it comes down again. the zip broke the structure. Yes, it does this time. It does this time. Can you see? High, low, high, high, higher, low, higher, high. All right, then it break the structure. Yes, by a bit, but this is the type of, how should I say, dilemma situation that you should consider. Are you going to take the trade or not? All right, this is a dilemma. All right, so the price came back to this area again. Now what you have is that you have fake out along this area. You have fake out. All right, you have a lot of fake out. Right, I can make it like this. Yep. You have a lot of fake out. Means that the price likely to react at this zone before the big drop. All right. Now, just now we are talking about 58 pips or 50 something pips. I forgot about it. Where you should be entering, you can see that there is a clear entry over here. There is a clear entry, right? Some might consider here. All right. Some might consider here. Some might consider here. So you can put both. I can tell you, if you are not, how should I say, you are not familiar with it, you can put at both area. One of the reason I can give you very, very valid, strong reason why you should do that is that from 58 pips, now my price range, even I place this one over here, right? Let me place this one. From 50 something pips, now my risk has reduced to 8 pips, and the other one is 7 pips. What do you expect? What do you want? All right, what do you want? All right, so the price react at this zone and then drop. So this is a QML. Can you see it's a QML setup in a big time frame? All right, big time frame. It does not matter what happens there. This is a QML. So you have reduced your risk from 50. Sorry, reduced from 50 to 8.5 pips or 7.3 pips. So it's a very, very good confirmation, QML. And of course, it's a very good way to have a sniper entry, means that you have reduced your risk, all right, by a lot, So of course, the price went down nicely, all right. You might took your profit anywhere along the way. It's okay, because there's always chance to go into the trade again and again and again and again. All right, so now let's look at the second example. All right, let me get everything out first. All right, okay, so now look at the second example, the current situation. So the price went up, and then, which was reacted just now, and then dropped. All right, drop and broke the structure. So this is the structure. All right, guys need to learn how to read the structure. It's very, very important. All right, especially in higher time frame. So yes, broke the structure, and now there is an attempt. There is an attempt going up. All right, going up. So similarly, if you look at this whole thing over here, you might consider to this is as a H4. It's high, low, high, high. Then break structure. All right, structure broken over here, right, in H4. So is this a QML? Yes, this is also a QML. So now, same thing, dilemma. You have two zone, very, very obvious two zone. One is over here, the other one is over here. All right, I'm going to change the color so that it's easier for us to recognize. I put this in red color, right? So the red color zone first. We talk about red color zone, right? So if you look at the red color zone, the price came into this zone. All right, the price came into this zone. Don't sell immediately. Wait for price structure to break. All right, it came down, but does it break any structure? Where is the structure? First of all, where is the structure? This is the structure. All right, this is the structure over here. Right, low, high, low, high, low, high, and then low. Does it broke the structure? No, it's far away from it, and it continued going up. So you have, how should I say, not minimized, you have avoided go into silly kind of trade by doing this thing. All right, you have avoided into this silly kind of trade. So this is the one of the confirmation. Then the other confirmation that the price came into this area, went down, but still, if you look at it, the candlestick is close within the area. So there is no confirmation at all. You can reduce all this stupid kind of trade, right? So what happened next? Now let's go back to D1, all right, the daily chart, and look at the green zone. All right, look at the green zone. Let's take out the silly zone first. So this zone over here, you do not know whether will it react or not. All right, you do not know whether will it react. And of course, the other thing is that this zone is huge. All right, for me, it's huge. 70 over pips, 74. I make it 74. So same thing, you go to H1. Let's see what it is happening. All right. All right. So you can see that H1 over here, this is where you will take your uh whether you want to read it correctly or not, or you want to take your risk. All right, it's up to you. So the price is moving low, high, low, and then high over here, low, and then going high again. Then does it break the structure over here? It does not break the structure. It does not break the structure. All right, it's just we call it as a head and shoulder, similarly something like head and shoulder, but one side is bigger than the other side. So it's up to you to take the risk. All right, it's up to you to take the risk, because now if you look at it, the fresh zone is over here. The fresh zone is over here. And what type of confirmation can you get from this zone? Similar with the D1. All right, it react at this zone, all right, and then it closed outside of the zone. Now look back at H1. It reacted at this zone and then closed outside of the zone. It closed outside of the zone. So you can execute your sell at this point. All right, you can execute your sell at this point and place your stop loss just a few pips above, as for depending on your broker's spread. All right. So what do you get after that? There is a structure break. After that, there is a structure break. So you might get into this trade and you are running profit. You have a good running profit of let's assume, I don't know, 70 over pips. But the most important thing here is that not to think about profit first. Think about your risk. Think about your stop loss. All right. So from 74 pips, yeah, I remember correctly. What is your risk now? Let's make a wild guess. I'll say that it's around 12, 15. Right, it's around 16 pips. It's around 16 pips. So I have reduced 70 over to 16 pips. Is it good or good? All right, it's excellent kind of way of reduce your risk. All right. So is there any possibility of getting into this trade again? Yes, there is. There is, because the structure just broke over here. All right, the structure just broke over here. Sorry for that. All right, the structure just broke over here. So meaning that that is still possible. The price will react at this point before it plunge down again. There is a possibility only. All right, you hear my word? I just say there is a possibility. I won't say it's definitely will do that. Right? So if you look at daily chart, it is very, very beautiful. It's very, very beautiful. If any one of you has took this trade, I can say that you might consider taking your profit around this area first. Right? Just be aware. Then it should be a very, very big distance. 100 over pips, definitely. 100 over pips. Right? Just be aware of this zone. This zone is very dangerous. Other than that, if it drops, you drop all the way, because there's no other fresh zone left, and except for here. Except for that's the other one over here. All right, except for the one over here, that's nothing much. You drop all the way down to this one. So first of all, you must be familiarized with yourself on how to read the zone, read the structure, and do a lot of mapping. All right, all these thing you need to practice, need to backtest, right? What I said in most of my video, don't trust a single word I said. Never trust a single word I say. And it does not matter how big my account is. Don't come and ask me what is my lot size, what is my win rate. I didn't even sell you anything, guys. Come on. I didn't sell you anything. I didn't ask you to join anything. All right. I'm giving you free education. Go out, backtest it. All right. If you guys really like my video and wanted to support me, I'm just asking a simple click, all right, on the like, the thumbs up button. And of course, if you like all this video and you wanted to get more notification of early video release, just subscribe to the channel. All right. So I believe that is all of the sharing today. All right. It's very powerful sharing, and hopefully it will how's it lip frog lift frog leap your trading to the next level, to another level. All right. And wish you guys out there earning a lot of money from the market. All right, that's all for today. So see you guys next time.